Hello everyone, welcome back to our Accounting 210. In this video, we look at Chapter 8, the Special Accounting Lab assignment. You just have one question, I believe, for this chapter. So let's look at this one. Company is making snowboard, right? It cost of making 1900 is as this. So I click it here. You have all the information here. And then direct material, direct labor, variable manufacturing fixed, total cost, and then for each one, the absorption cost. Okay, suppose on outside the supplier, they can make it for $17 each. You have to pay $3 per unit to transport. Okay, now you have to pay extra $3 where it will add its own logo at a cost of 0.3 per binding. So you have to pay $3 for shipping. You have to pay 30 cents for the logo. Read the requirement. First one predicts that purchase this from outside will enable to avoid 2,600 fixed cost. Prepare analysis to show whether you should make or buy. Okay, now the first one is you can save 2,600 fixed cost. There is nothing to do with the freight capacity, so we don't really worry about that one. So you have a make, you have a buy, you have the difference. Variable cost, we said make is what? We said make is so you have to calculate, right? So for our situation, hey, sorry about that. I should put my note there. Sorry, give me 1 second. Sorry. Sorry about that. Okay, so now I can use my pen here. Okay, sorry about that. Okay, so for make or for buy, let's look at this information together. Now you have make. Sorry about that. So we have make, we have buy, we have the difference, and then we look at the make. We look at the variable cost for make. It said the cost is direct material, direct labor, variable manufacturing. Okay, so total is you have to add all these variable. Okay, so if you don't mind, I have to get it's all the direct, all the variable cost for make, all the variable cost for make. This is okay. So it's 17,500 plus 3,000 plus 3,230. That gives me total. Give me 1 second. Sorry about that. Come on. 17,500 plus 3. Your numbers definitely will be different from mine. Okay. Plus 32. 30 gives me. You will say, hey, professor, what are you doing? 23. I will tell you why I'm working this way. And then, okay, so that is the first one we take care of. But we also remember if you make, that's it, right? So you have direct labor, direct material, and then variable manufacturing overhead. If you buy, what is the total cost you will have? If you buy, purchase cost is $17 each, and we are purchasing 1,900. We are purchasing 1,900. So it's 17. You have a 17. You have a 17. 17 times 1,900. That gives you 32,300. So are we done? Yes or no? So is that the total cost of buy? Not really, because if you buy, you have to also pay $3 for transportation, and then you also need to pay 30 cents for the logo. So you still have to pay $3.30 and then times the 1,900. So your total will be 3.3 times 1,900 units gives you another 6,027. So your total variable cost of buy actually will be $38,570. So your total of make is this much. Your total buy is this much. Okay, your total buy is this much. And now we need to find out. We need to find out the fixed cost. We talk about the variable cost. Now we need to find the fixed cost. If you make your fixed cost is $70,050. If you buy, you can save $2,600. Okay, so if you buy, you can save $2,600. So 7050 minus 2,600. If you buy, your fixed cost will be 4,450. So now you add those two numbers. I'm not going to do it. You can do it by yourself. Your total relevant cost for make will be total variable cost plus total fixed cost. Your total cost of buy is total variable cost and total fixed cost. Then you get your total cost of 1,900 units. Your decision is you should make or you should buy. Okay, does this make sense? Does this make sense? Okay, next one, we continue with our question. Now said the facility freed by purchasing, we can use it and then to do something else and to get 2,700. If we buy, we can use the equipment and do something else and get 2,700. So the fixed cost will be the same as if you had purchased the bonding. So which alternative makes the best use of your facility? Make, buy, and leave the facility idle. Buy, but you make another product. Now you have three situations, right? You have three situations. The first one is you make. Second is you buy and leave it idle. Third one is you buy and do something else. Okay, you buy, do something else. So now you get your make, buy, and then do something else. Okay, so if you make, you get all the variable cost the same as the first question. You get all the variable cost. Your fixed cost will still be the $7,050. You know, that's your total cost. So if you make, there is no, you don't less the profit from another product, right? So if you make, you cannot do something else because you make, you are using the facility. So it will be zero. This item will be zero. You get your net cost there. Second scenario is you leave, you buy, but you leave the facility idle. This is exactly the same as the one we just did. You buy, you leave something else idle. So our variable cost is just the $17 each, but we also need to pay $3 for the shipping, 30 cents for the logo. So that's your variable cost. Your fixed cost will be how much less? Your fixed cost will be 2,600 less. Your fixed cost will be less, and then you get your total cost. Since you leave the facility idle, you will not use it to generate the income. So now your profit in this scenario is also zero. The last scenario is you make another product, you buy, but you make another product. Your variable cost will be the same as your second scenario, is that you will have all the purchase price and then also the transportation and the logo, right? So you will have all this. But the only difference is now your fixed cost will be the same as you, let's say, if you, the total fixed cost will be the same as you had produced the bond. So in this scenario, your fixed cost will be the same as you make, as you purchased. Okay, sorry. So your fixed cost will be the same as your purchased. In that situation, those two are the same. The difference is, in this situation, you can do something else. So you have to less the income of 2,700 from producing another project. And then you do all the numbers, you will get your decision is whether you should make it or buy it. If you buy it, you leave it facility idle, or you buy it but make another product. Okay, so I will post the solution to a very similar question, but with different numbers, and then you work on yourself. Look at my solution, watch the video, read your textbook, email me or ask me if you have any question. Okay, thank you. Next video, we look at all the multiple choice. Thank you.